I would like to thank all of you for joining the WingsWay Money Markets seminar. This is going to be a very interactive seminar with a lot of knowledge and understanding, and will help you understand a lot about what we are doing here at WingsWay Money Markets. I can see that there are many people who have joined from different countries and different time zones. So we and also hope you are very excited about this session. Now, before I hand it over to the mentor for today, I would just like to talk a bit about WingsWay. So WingsWay, we are a short-term skills-based training provider based in UAE. We are an ISO certified company. We offer more than 250 different courses across a variety of different verticals. We have trained over 75 plus nationalities, and the count is only increasing. We are based in Dubai and Abu Dhabi. We have two of our offices in Dubai, in Al Mamzar area, and we have one of our offices in Abu Dhabi on Electra Street. We also, along with hard copy certificates, issue you blockchain-based verifiable certificates, and we are the first institute in the Middle East to introduce student insurance. So you could say that we are the pioneers of student insurance in institutes here in the UAE. Now, we just look at a small video. So that was just a small video to sum up what we do. And to just give it to you guys in a nutshell, basically, WingsWay Training Institute, we do a variety of different things. Firstly, we have international certificate and diploma level courses from international certifying organizations from around the world. We also, along with that, have custom designed, tailor-made training programs to suit your specific requirements. We also are into corporate training and consulting and many other different areas. WingsWay's mission is to empower individuals to unlock rapid career growth and personal transformation through in-demand skills and knowledge, benefiting themselves and their organizations. We provide a dynamic learning environment where you gain the confidence to excel in the global workforce and pursue entrepreneurial goals. In very simple words, we help you to tap into your potential and find your roadmap to your career. And our vision is to be a global leader in innovative, skill-based trainings that transform lives and fuel economic growth. We envision a world where everyone has access to the learning resources they need to build a fulfilling and impactful career. So when we look at our different training courses, our training courses include, but are not limited to, aviation, airports, travel and tourism, cargo and freight, customized corporate training solutions, management and leadership programs, procurement and supply chain, logistics and transport, finance and compliance, human resources, IT and program learning, language learning, grooming etiquette, and much more. When it comes to our values, we are committed to being empowered, innovative. We strive to be excellent at everything that we do. We look to make an impact on every single student that does a course with us or works with us on our learning journey. And we also look at being practical. So if you just see, here are some of the international certifying organizations that we are associated with. You can check out these details on our website. And now, before we move into the main topic for today, which will be done by your mentor, I'd just like to give you a small brief on him. He's someone who was a mechanical engineer and then turned into an investor. He has multiple years of experience in this particular area. And I guess what I'll do is I'll leave the rest to Mr. Shaz Kantawala, who's your mentor for today, to introduce himself and start the session. So enjoy a great session.
Good evening, everyone. I'm Charles, and welcome to WingsWay Money Markets. Let's quickly move into what we'll be going and doing for today. I don't want to take up much more of your time. Today, we're all here because you want to elevate your trading journey. So, how are we going to do that? What are we going to do? I'm sure you all want to make more money by doing less. You want to make your money work for you. You want to learn how to build financial wealth, generational wealth. And our webinar today is designed to cover exactly that. And I'm sure all of you have had this one friend or multiple friends that are always talking about how they have invested in crypto and now they're rich, how they're investing in gold, how they're trading stocks like Apple, Nvidia, Microsoft, and they're at all-time highs right now. And you must be feeling that sort of FOMO, like, damn, I missed out on that opportunity. Why didn't I invest in Apple when it was 100? Why didn't I invest in Microsoft when it was $15? That was a long time ago, but you know what I'm trying to say, like that opportunities are endless and the market is skewed positively to the upside. And our goal here today is to try and make sure that you take something away and learn about how to invest in yourself for your financial futures. So just very quickly, I'll run another poll once again, and I just want to know how many of you have either traded or invested in the stock market or any other type of market before. Absolute 50-50 split, which is very interesting. That means a lot of you have come here with some experience, some knowledge. Maybe some of you have lost money in the past and you want to learn how to build back your money. Maybe some of you are interested in just learning fresh. You don't know what the stock market is. So I hope that I can cover some of those topics here for you today. So we're going to talk about why trading and investing is the path towards your financial freedom. Let's go ahead. So just a little bit about me. As Jeanette mentioned, I'm a mechanical engineer. I did my undergrad in mechanical engineering, and just alongside that, I always had this passion of finance and the money markets and how money exchanges hand. I'm sure all of us have heard of these famous names, Bill Gates, Warren Buffett, and how they're the richest men in the world. And if you look at how all of them have become rich, it's basically by investing and trading and doing it over the span of the last 60 years of their lives. So I had this passion and sense of, wanting to make a lot of money. And that came from within the financial markets. So I had taken up a little entrepreneurship and finance class during my college days. And I sort of just fell into the space. And post graduation, I decided that I wanted to work for myself. I wanted to live and work at home. I wanted to be my own boss. I wanted to work my own hours. And that is the kind of opportunities that trading gave me. I'll tell you about the agenda for today's webinar. Just a second. Yeah. So we'll go over why one should trade and invest in the stock market or any market or anything in particular. Then we will cover some of the most common pitfalls that traders and investors make. Like, what are the mistakes that a lot of us newbies do when we get into the markets? Then we will cover some misconceptions about trading. I'm sure a lot of you have some preconceived notions, or your families might tell you one thing, your friends might tell you another thing. So we'll cover some of those topics. Then we will come to what the key to success is, which is basically educating yourself about the markets and how they work and why they do what they do. Finally, we'll talk about what is WingsWay Money Markets. I'm sure a lot of you have heard about WingsWay Money Markets recently, and we'll be talking a little bit about that. So let's talk about trading versus investing. I'm going to do another quick poll, and I just want to know if, how many of you know the difference between trading and investing? Okay, so it's again around like a 50-50 split between the people who know what the difference is between trading and investing. So let's try and fix this misconception and understand it better. So trading versus investing. Trading is something you do in the short term. It involves trying to make money based on short-term fluctuations in the stock market or any market for that matter. Investing is something that you do over a long span of time. for years. You might want to invest in property, you might want to invest in stocks, you might want to invest in shoes, you might want to invest in painting. You can invest in a lot of things, but investing is something you do in the long term. You hold your position, you buy something, and you hold it for years. You invest with the anticipation that the price or the value of an asset is going to go up. Whereas when you trade, you have a short-term belief or a short-term piece of information that makes you believe that the price of an asset is either going to go up or down. And when you trade, you can make money when the price of an asset goes up or down. It doesn't have to always go up for you to make money. Now, the strategy. When it comes to trading, trading is always based on price action, volume, trends, and technical analysis. Now, some of you might be familiar with some of these words. Some of you might not. We will cover some of these words a little bit later. But price action has to do with how price moves up and down on a daily basis, on a weekly basis. Volume is basically the number of shares or the number of something, the number of things that are exchanged from hand to hand. A trend is basically a trend. I'm sure you all know what a trend is. A trend is like either a trend is going up, a trend is going down. And technical analysis is everything to do with finding demand, supply, supports, resistance, patterns. Based of all putting all these things together, you can basically trade in the short term. Investing has to do with fundamental analysis. You basically understand the value of a company. Why does a company have the value that it has? For example, Apple is a $4 trillion company almost. And the reason for that is because it has great earnings. It has a lot of cash on hand. It is a tech company that is bound to grow with low interest rate environments. It has a long-term outlook beyond the 2-3 years that most other smaller companies might have. So based on these things, you can invest in a company like Apple because its fundamentals are strong. Now, risk appetite. When you trade, there is usually a higher amount of risk that you take because you are doing it on a daily basis. So when you do more of something, you have more risk of losing, but you also have more probability of winning. So when you trade, you have to have a higher risk appetite. And when you trade, oftentimes what people do is they use leverage. For example, if I have money to buy 10 shares, I can use leverage and instead buy 100 shares or 1,000 shares. That's where my risk increases because I have only money to buy maybe 10 shares of something, but I'm using a leverage, a 10x, a 10 multiplier leverage to buy 100 or thousands of something. That's why you need to have a higher risk appetite when you trade. When you invest, you don't have as much risk. You're not worried as much about the fluctuations of the stock price. For example, let's stick to Apple again. If Apple is trading at $100 today and you buy Apple at $100 today, the price might go up to $105 by the end of the day. If you decide to take your profits, you have earned $5. If you're investing and Apple went up by $5 today, you don't really care about how it went up $5 because you're looking at the 10-year outlook. You want Apple to go from $100 to $500. So there's no risk. The amount of risk involved is much lower. Even if Apple moves from $100 to $90, you're not that worried because you know that in the long term, in the 5-year outlook, in the 10-year outlook, you expect Apple to go to $300. So a $10 move against you is not going to, scare you out of a position. The frequency. I mentioned this a little earlier, but when you trade, you often take multiple positions in a day, anywhere from 5 to 20. When you invest, you probably keep investing once a month. You put down money in certain names that you like and you hold it. Lastly, emotional discipline. When you're trading, you have to have a strong mindset because you're going to go through multiple ups and downs. You're going to have periods of highs, you're going to have periods of lows, all within 5 to 10 minutes, depending on how many trades you take. So your mental game needs to be very strong so that you're not carried away by your emotions. For example, if you take a loss, you might feel bad. You take another loss, you might feel worse. Now, if you act on how you feel, you're going to go down a downward spiral. That is why when you trade in the short term, you need to have a good mental mindset. You need to have a good, strong understanding of your emotions. Whereas when you invest, again, as I said, it just requires patience. You have to buy and hold something with the anticipation and the belief that it will go up in the long term. You don't have to worry about the short term. So I hope that's clear about what's the difference between trading and investing. And just to make sure you've understood, I just want to have one more poll again. And I want to know, what would you all prefer doing? Would you rather trade or would you rather invest in the stock market? So what are you most interested in pursuing? Perfect. Okay, I'm getting the answers. I'm getting the answers. Come on, guys. Come on. I need everyone to participate in this. So I'm seeing the results of this poll. So again, it's about a 50-50 between who wants to trade versus who wants to invest. So I'm guessing there's some of you who are here who might be younger and have the risk appetite and have the passion to do this on a daily basis and consistently be in and out of positions and make money. Whereas some of you might be thinking of the long term and you have savings that you want to just park away and build for the long term. So that's very interesting to know, and I'll keep that in mind. So why should one trade or invest? So first of all, inflation. I'm sure you've all heard of this term, or maybe you haven't, but if you have heard of this term, it became very prevalent and common most recently during the 2020 COVID pandemic, because as the pandemic happened, the cost of goods and services began to rise. Your average bread in the supermarket might have gone up from $1 to $5 or $4 even. And you might be wondering, why is everything so expensive now? That is what inflation is. Inflation is basically the cost of money. Now, during 2020, when COVID happened, inflation in the US, India, China was around 8 to 10%. Now, with inflation that high, it means that the value of the money sitting in your savings accounts are decreasing by 8 to 10% every year. So you're not doing anything. You think you're saving money by keeping your cash in your account and not spending on luxury goods. But what's happening is your money is losing value by 8% every year because of inflation. How do you protect against inflation? You have to have the money that is sitting in your bank working for you, earning money with money. That's where you trade. That's why you invest. Because say you invested in the stock market, for example, you might be losing 5 to 6% on inflation, but you could be making 10 to 12% returns on the stock markets, on your investments in the stock markets at the end of the year. So you're netting 6% profits, for example. So now, even if you have money sitting in your account, there's still that money that's sitting in your account is still making more money for you, right? Secondly, a supplemental income. I'm sure everyone wants to have more than one stream of income, because you get your salary, you pay your bills, and after paying your bills, you're left with almost maybe nothing in the account. And you're like, now what do I do? I just work for another month and I live frugally, and the cycle continues. So trading and investing allows you the opportunity to basically earn a supplemental income, right? Next, building generational wealth. The stock market provides you with a very unique opportunity to basically compound your money. Let's say, for example, you deposited $500 into the S&P index, the S&P 500 index, which is similar to maybe the Nifty in India and other major indexes in the world, right? So say you invested $500 every month into the S&P index. Had you started doing this in 2010, by now in 2014, you would have had at least $150,000 of earnings from your $500 per month investment. Your $500 per month investment would have amounted to around putting 90,000 into the markets, plus an additional $60,000 gained just because of compound interest, the power of compound interest. This is one of the biggest reasons you see people like Warren Buffett, Bill Gates with huge stockpiles of money, because over the years they constantly put money into the markets, and their money has been compounded at 7% a year, every year. Next, low startup costs. So trading is one of the businesses where you almost have negligible costs compared to any other big business that you want to start up. Just think about it. What does it take to start up a business? If you're passionate about, for example, selling art, you have to sit down for maybe hours and hours on a day, do your painting. You maybe spend 3 hours a day for one entire week, 5 hours a day for one entire week. You're tired. You've done your paintings. You've invested in buying paints, bought oil, you bought the canvases, you stretched your canvases. You've done all that. Now you have to go set up an online store or a physical store. Most commonly, you'll do it at an art exhibition. So you'll set up a physical store, you pay rent for that. You might hire some employees for marketing. You might hire some salespeople to sell your artwork, to promote it on other platforms. You might hire influencers to talk about your artwork. You're paying multiple people a lot of money. When it comes to trading, all you need is a laptop, a phone, a brokerage account, and some saved up capital, which we all have in today's day and age. I mean, I think everyone has a laptop and a phone because you're all here sitting and watching this webinar today. And that's all you need. And you need some savings. And with that, you can easily compound your wealth. Trading is one of the easiest businesses to grow in size, that too. We'll come to that on the next slide, and I'll explain that. I'll explain exactly why that is. But for now, one more point, long-term security. By trading and building, a passive or an active income, you now don't have just one income, which is your salary to rely on. You have a second income stream. So say, for example, in a poor economic condition, or when there's job loss or the markets crash, for example, you still have your trading income to support you. You don't have to be as worried as someone who just survives on one job for a living, right? So let me just get you guys one more poll. I just want to know if do any of these points about trading and investing, are you able to relate to them? Do these reasons make sense to you guys? Are these certain reasons that you would want to trade and invest your money? I'm seeing I'm seeing a lot of, I think everyone's saying yes. I think everyone's saying yes. That's perfect. So I mean these are genuine reasons. These are genuine reasons why you would want to trade and invest your money. Perfect. I think this is 100% of people said yes. Perfect, perfect, perfect. I'll just share the results with you all so you can also see. And yeah, perfect. So let me move on then. What does trading allow you to achieve? We talked about why we should trade and invest. Now, what does it allow us to achieve? By trading, we can achieve financial and time freedom, right? Some of you might not have heard of this word of time freedom, but let's talk about it. So, first of all, as I discussed earlier, your money works for you. You can earn income by trading your money for more money. I don't think there's not much other fields where you can trade money for money, other than if you go for you go to a casino maybe, but then that's gambling and that's something else, and we don't talk about that. But money works for you when you trade. Secondly, you get time to pursue other passions that you have, right? Maybe you're passionate about dancing, you're passionate about photography, you're passionate about painting, but you're working a 9 to 5 job. After you work your 9 to 5, we all know no one's 9 to 5 ends at 5, it ends at maybe 8. Then you eat dinner, you're tired, you go to sleep. You have lost all the time for your passion. You have no motivation to do anything else, right? So you don't have any more time. And that is what I mean by time freedom. When you trade, you can trade for maybe 1 hour a day, you can trade for 2 hours a day, you can trade for 5 minutes a day, and you could make money that you made in a month in maybe 2 or 3 days. And then you basically can take the month off. For example, you make 5,000 dirhams a month, 5,000 dirhams, $5,000 a month. You spend the whole month doing that. You have no time left in the month to do anything else. If I told you you could make $5,000 a day or $5,000 a week, you then have 3 extra weeks to spend doing what you love, what you like doing. So trading allows you time and financial freedom. Thirdly, you're your own boss. You call the shots with all the business decisions that you take. You don't have to report to anyone but yourself, and you are solely accountable for all your actions. You can take time off as and when you need, right? You feel sick, take a sick leave, no problem. You have a family event, go for your family event. Just don't trade for those days. When you feel mentally unfit, no problem. Just take a break. Or maybe lower your sizing, lower your position sizing. You don't have to trade as big every day. You don't have to make as much money as you want every day. You can make $5 a day. No problem. Depends on how you feel. You are your own boss. Then scalability. Like I mentioned in the last slide, trading is a very scalable business, right? You can easily increase your position sizing from, for example, if you used to trade, if you take usually 5 shares on Apple, if you trade 5 shares on Apple and you make $20 trading 5 shares of Apple every day, right? Your account grows a little bit, it grows a little bit. A month from now, you can maybe trade 50 shares of Apple, right? You have 10 times your position sizing. So you 10 times your profit potential. From making $20 a day, you can make $200 a day. How? Because you just simply increased your position sizing. If this was a physical business, for example, if you're selling jewelry or if you're selling bags, if you're selling bags, you would need to buy more bags from the supplier. You need to have a better contract with them. You need to buy a larger warehouse. You need to pay more rent. You would have a lot of other fixed costs that go up as you increase the size of your business. It's not like that with trading. You do need more capital to trade bigger sizes, but that's the only thing you need. Apart from that, all you need is the right mindset and the right skill set to appropriately size up and make more money. You don't need any physical assets other than the capital that you have made in the past by trading slow and slow. Lastly, anytime is a good time to trade in the markets. The beauty of the stock market is that it is never going away. Since its inception to up till now, and for hundreds and hundreds of years to come, the stock market isn't going away. The entire world's wealth is packed into the stock market. Markets move the world, essentially. You can trade the stock market today, you can trade it tomorrow, you can sleep today, and you can trade it day after. And that's the beauty of financial freedom and time freedom. You can start trading today, and you can start learning how to trade today. And maybe by November, you could be trading the upcoming US elections. The upcoming US elections are a very volatile time for the markets. Everyone is excited about who's going to be the president. Everyone's uncertain about it as well. In that hype and fear and greed, there is often a lot of volatility that takes place. And that volatility is what traders trade on. That is what provides us with opportunities. You can trade the future of tech. You can invest in the future of tech. For example, Nvidia right now, I think a year ago, Nvidia was about half the price it is today. And just imagine, a year ago, if you invested into a stock like Nvidia, a microchip company, an AI-based company, you would be up 100% on your investment within the span of a year. So, and you can even put money in today, and in the next 2 years, you could be up another 100%. The market is always skewed to the upside. So anytime is a good time to trade. And that is the beauty of trading. It gives you financial and time freedom. Let me ask you one more question, right? What are the reasons that you feel you would want to trade and invest in? I know I asked you in the last poll if all those reasons made sense to you, but what are some of your personal reasons that you would want to trade? Most of you want to trade for a supplemental income generation, which is basically, I think, one of the main reasons why a lot of us start. The second highest polling option is becoming your own boss. I'm still waiting for all of you to answer, so these polls are changing. I'll share the results with you once the poll is completed. Okay, so I think I've got a lot of responses right now. I'll just share the poll with you. So as you can see, a lot of you are interested in supplemental income generation and becoming your own boss. Quite a few of you, a few number of you want to build generational wealth. Some of you want to work from home. That's also a big plus point. So this is interesting. I'm sure some of you might have some other reasons we can talk about in the live Q&A session. Now you know why you should trade and invest. You know what trading and investing allows you to do, be financially free and have time freedom. But now you must be wondering, what can I trade? Or what is trading? I'm sure a lot of you are confused and always think about, when you hear the word trading, you always think Forex, right? And you think Forex, that is trading. But I think that is one of the biggest misconceptions in the marketplace, that Forex is trading. So let's talk about what you can trade. So first of all, You can trade stocks, right? Stocks are basically shares of companies that you can buy and hold, or buy and sell. Stocks are traded in the stock market. You have stock markets in US, in China, in India, Japan, Australia. Even the UAE has its own stock market. So stocks are basically companies, and you can trade shares of those companies. You can buy ownership in a company. You can buy 5 shares of Apple. You can buy 10 shares of Google. You can buy 100 shares of Amazon. Each share you buy represents a certain percentage of ownership of that company. You can buy them, you can sell them. You can sell them first, and then you can buy them back later. That is called short selling. That's a little more complex topic. We'll go into it in another webinar. But you can trade stocks. You can trade stocks in the stock market. The stock market consists of companies, big companies, publicly traded companies that decide to list themselves on the stock market so that they can be traded by public individuals like you and I, and we can build a certain ownership in that company. Next, you can trade cryptocurrencies. I'm sure a lot of you have heard about cryptocurrencies, right? Now, the cryptocurrency market is different. It's a different market. It's not the stock market. It's not the Forex market. It's a different market. It's the cryptocurrency market. And on the cryptocurrency market, you can trade cryptocurrencies like Bitcoin, Ethereum, Dogecoin. I'm sure all of you've heard of some of these names. The cryptocurrency market is highly volatile, and it is a decentralized market. That means there is no one place where this market is, governed by. It's all on the blockchain. Forex market. A lot of you must have heard of the Forex market. I think that's a very common term, especially in the Middle East. The Forex market is where you trade currencies, right? So, for example, you go to a Western Union. You're traveling, say, for example, from Dubai to India. You take your dirhams, you take 500 dirhams, and you go and you exchange it at the Western Union, and you want rupees. With your 500 dirhams, you get 20,000 rupees, for example. You have just carried out a Forex trade. When you come back from India, you give those 20,000 rupees and you get 510 dirhams back. You have basically made money on a Forex trade because of the exchange rate differences from the time you left the country to the time you came back to the country. So that's a Forex trade in the Forex market. The Forex market is also called the currency markets. Then there's the commodity markets. In the commodity markets, you can trade commodities like oil, gold, wheat, corn, grain, right? You can trade commodities. Again, this is different from the stock market. This is the commodity market. Options contracts. This is a fairly new term, I'm sure, to a lot of you, but options are a sort of leveraged product that give you the obligation, the right, but not the obligation to buy or sell a stock, right? It's a little complicated, but it's a type of leveraged product which is linked to the stock market. Futures contracts. Again, these are you can trade futures contracts on stocks, on commodities, on ETFs. They are a type of leveraged product again, which you can trade in the markets. Bonds. Bonds are issued by government bodies. Lastly, ETFs, mutual funds. These are a collection of stocks or companies that you can trade in different different types of stock markets in the US, in China, in India. So there are different types of assets, and different types of assets that you can trade in different markets that exist. There is not only one type of big market that exists. There's different markets that specialize into different things: stock market, Forex market, commodities market, the cryptocurrency market. And in those types of markets, you can trade options contracts, futures contracts, ETFs, trading. You can trade all of these things, or you can only specialize in one thing. I trade in the stock market. I trade in the US stock market, and I trade stock options. So I trade options contracts in the US stock markets. Okay. So moving on. Let's now just, let's cover some common misconceptions about what is trading, right? I'm sure, like, I'm sure by this picture you can already think about what I'm going to mention, but let me just start the points. Yeah. So one of the first biggest misconceptions that people have is that trading is gambling, right? I'm sure you've heard of that before. People talk about it like that, but that's just far from true. It's a taboo mindset that society has set upon people who trade just because trading seems too good to be true, right? Someone is sitting at home, they're pushing a button and they're making money. How is that possible? That can't be right. But gambling, gambling is based on hopes and wishes in an activity that you do for the sake of entertainment purposes, right? Where your goal is just to have a great time and hope that you hit the jackpot. Trading, on the other hand, is a game of calculated risk management, patience, and pure hunger for the process of trading over making money. When you trade, you I don't expect anyone who trades to go in and sit and think, I'm going to make money today. That's the wrong mindset. Because if you think like that, that means you just want to make money. You just want to, your goal is to make money. You might as well go to the casino and gamble a little bit. Maybe you'll make, maybe you'll lose. Trading is where you have a plan. You come in with the right mindset. You decide what you want to do. You decide how you're going to do it. You take a calculated decision based on principles and factors that are in front of you. So it cannot be further from gambling. Because when you gamble, you just go, you throw your money, you put all your money on black, you put all your money on red, you put all your money on 21, and you just hope it hits. If it doesn't hit, you go home with a very sad face. If it hits, you feel like you're the king of the world. But that's not trading, right? So I hope that is clear with all of you. The second point is following signals is equal to success. Big misconception, right? I'm sure you might have seen ads on Instagram or like videos on YouTube and things like that, where you have people who tell you that join this Telegram group and I will give you all the signals and you just enter here and you exit here and you will make money. That is absolutely bogus. No one can tell you how to make money, because if that was the case, everyone would follow one person, right? The entire world will follow the one person who's making money, and then everyone will make money. So if everyone is making money, who's losing money? It is a two-sided coin. If someone is making money, someone is losing money. But if everyone is following one guy who's making money, then who's losing money? So following signals, following what someone else does, is not going to guarantee you any success, right? For example, if I'm trading, I'm experienced, I know how to manage my risk, I know how to size my positions correctly. I have maybe a bigger account than someone else might have, right? I say that I'm going to, if I tell someone that I'm going to enter Apple at $100 and I'm going to exit at $105, that's my plan. You also say, okay, I'm going to do that. You enter Apple at $100. Apple goes down to $95. What are you going to do? Are you going to hold? I'm going to hold. I'm going to hold because my risk management, my capital allocation allows me to hold. I had a great day yesterday, so I'm going to hold it. I have no issue with holding through a little bit of a loss. You lost the other day, or maybe you have lesser capital, so you cannot afford to lose $5 against you. You decide to exit. You take a $5 loss. I'm still holding. Price goes to 105. I exit. I made money. You did not. I said I gave you a signal. You are sad that the signal did not work out, right? What I'm trying to say here is that signals is the wrong way to go about trading. You have to be educated about trading and the space that you're in with regards to risk management, with regards to planning your trade out, knowing why you're doing what you're doing, having your own plan in place, having your own emotional understanding of how am I going to react if I lose $5. If the stock goes $5 against me, how am I going to react? Am I going to be anxious? Am I going to be irritated? Am I going to be annoyed? I'm going to be angry and enter more size. Am I going to be okay and say that's according to my plan? I'm going to wait because my plan said it's fine. $5 against me is fine, right? So everyone has a different emotional cycle and a different trade plan. Trading is not just about enter exit. It's about everything in between. right? So this is the second misconception. The third misconception, you have to predict correctly, always. Again, wrong. You don't have to predict correctly. I can have a 30% win rate, right? I can win 30 out of 100 trades and I can still make money. You could lose 30 and win 70 trades, but you could still be losing money, right? You don't have to predict correctly. You don't have to say that, okay, the price will go up and I have to be right this time. Your win percentage doesn't matter, right? You don't have to always say that the price of the stock is going to go up, and if it doesn't go up, I'm wrong and I'm going to lose money. I'm a loser. I'm a bad trader. No, everyone loses money. You just have to be. You have to make more money when you are right and lose less money when you're wrong. How do you do that? How do you know how to do that? By being educated about what is proper risk management, about what are the personalities of the stocks that you trade. Like a stock like Apple might move only $2 in a day. A stock like Tesla might move $12 a day, right? So if a stock like Tesla moves against you by $3 or $4, you can be like, okay, no problem. The range is $12. $4 is not that much. But if Apple moves $4 against you and you're holding Apple because you are like, oh, Tesla also did that, I should be fine. I'll hold Apple. But Apple moves only $2 a day. It's $4 against you. You're going to be worried. You're going to lose more than you make, right? So it's about knowing many different things about how the markets function, about how stocks react, how stocks move, and accordingly managing risk, which is why prediction of the direction is not necessarily always the best way to make money. I don't need to have 95% win rate to make money. I can have even 20% win rate, but on the 20% that I win, if I'm making $1,000 every 20 trades and I'm losing $10 only for the other 80 trades, do the math. I'm still profitable, right? So, next point. You need a lot of money to start. Again, another misconception. These days, there are hundreds of brokers out there that are offering all kinds of leverage with and different types of products like CFDs to basically increase the amount of money that you can invest. If you have only $1,000 to trade, some brokers will say, okay, no problem, we will give you 50x leverage. We will give you 100x leverage. So your $1,000 is basically $100,000 that you can trade with. Of course, the risk is higher when you do that. But do you know that? That's what you need to learn for. How do you, if you're trading 100x leverage, how do you manage the risk? Because you're trading with 100 times the money you don't have. Most people, they open a brokerage app and they see 100x leverage. They have $1,000 in their account. They see 100x leverage. They press 100x leverage and they're like, wow, I can trade with $100,000. So they invest $70,000. One little move down and they're wiped out. Why? Because they did not understand what the 100x leverage did for them. So you need to know about the leverage that you're being offered. And you can use it in the right way, in the positive way to make money for yourself. Options is another, stock options are another type of asset for which you do not need to, have a lot of money to start with. That's one of the biggest reasons I went with options for trading, right? You need to be a finance or math expert. That's not true. I did not study finance deeply. I just studied about the stock market. I did a bunch of reading. I took a couple courses and I was able to trade. I just dedicated myself to learning well, right? Spending time learning from my mistakes. Professional traders don't lose. That's another misconception. That is another misconception, right? Everyone loses money. You have to lose in this game to make money. You can control the markets. Absolutely wrong. You cannot control the markets. You cannot think that, oh, I bought 10 shares, now Apple will go up in price. I'm correct. Wrong. There are bigger players than you who are out there and they move the markets. You just have to ride the wave with them. Lastly, markets have to go up to make money. That is, again, wrong. A lot of people come to me and they tell me, oh, Shaz, the markets were down today. Did you struggle? I'm like, no, it was great. Because you can make money when the market goes up, or you can make money when the market goes down. If the market goes up, you buy. If the market is going down, you're selling a position and buying it later. So if I sell something at 100 and I buy it at 80, I have made $20 of profit, right? So you can make money if the market goes up or down. So real quick, based on all these misconceptions, why do most traders fail, right? Traders trade emotionally. When they don't understand emotions, they trade emotionally, they make emotional decisions, they go on a tilt. And when you go on a tilt, you lose focus of what's happening. You only care about making the money that you lost back. I'm sure if any of you have gambled, I'm not saying that you might have gambled, but in sort of any exchange of money, if you have a bet with a friend, if you have a wager with a friend, you lose the wager, you're like, I want to win it back. You do something else. If you take it too far, you can go down the very scary path. That's called emotional trading. That is one of the biggest reasons most traders fail, because they don't understand how to deal with the emotions that they're feeling. Because in our daily lives, we don't really think about our emotions as much. We just act on what we feel. Whereas in trading, you cannot act on what you feel. You have to understand what you feel and then react appropriately. Secondly, lack of risk management. Most traders don't understand what is risk management, how to manage risk, right? As I said, I can win 30 trades out of 100 trades and I can still make money. How? Because I'm winning more on the winning trades and losing less on the losing trades. Next, over leveraging. I just talked about over leveraging, right? 100x leverage. Wow, I can trade $100,000 if I have only $1,000. What happens when you trade $100,000? You can also lose as much. So over leveraging is one of the biggest mistakes because no one understands it. But brokers have gamified the whole system to make us individuals understand less and make them more money. If we learn about what these brokers are doing, we can trade smart, right? Over leveraging is one of another big reason why most traders fail. They run out of capital because they don't know what they're doing. Lastly, inconsistent and insufficient learning, which is the crux of everything that I've been talking about, right? You need to commit to a structured, proper plan and approach on how to attack the markets, understand the markets, and only then will you be able to trade appropriately. So, based on all of this, I think it's pretty clear why you would need a trading education, right? Trading is not gambling. You have to have a strategic approach, informed decisions, and take calculated trades. You have to manage your risk appropriately. You have to understand your mental psychology, which is not something a lot of people talk about. Unless you've done a psychology course, you're not very aware of how your mental state is in certain situations. And the markets show you how you can be an emotional being and how you can leverage that emotion to your advantage. Lastly, a trading education will provide you a structured learning platform and a guide. Online, you might find everything scattered here and there. You might find very interesting, flashy pieces of information that don't tell you the whole picture, which is why you need a structured approach. You know, and with that, I think I want to introduce you all to what WingsWay Money Markets is, right? We at WingsWay Money Markets are very much ready and equipped to provide you with a comprehensive education system, talking about all the things that I've gone through and so much more. We have courses from all the levels, beginner to advanced. If you know nothing, I hope you've picked away something from this. And this is just a smidge of the courses that we'll have to offer. We'll offer a lifetime mentorship, ongoing support and guidance from industry experts, myself, throughout the course and beyond. We have a practical approach that we go through, which includes doing live simulations, in-person trainings, online trainings, and going through the simulations to understand how you have approached and how you've progressed as a trader throughout the course. Lastly, we'll focus on trading psychology, which is one of the biggest facets of trading successfully for a long-term career. So let me just break down the three tiered courses that we have, right? So our first course is basically a foundation into the stock markets. So in this course, you don't have to be qualified. You don't have to know anything about stock markets. You don't have to know nothing. I mean, I went into the stock markets not knowing anything to begin with. I'm a very science engineering background guy. I have no idea. I didn't know what money was. I didn't know anything about that. I just wanted to work a good job, make money. And then I came across the stock markets and I started learning about it. And I didn't need to know anything. So this course is something like that. It'll go over the absolute basics. An introduction to the stock market, what is price action, charting, candlestick patterns, technical indicators that are important. We'll go beyond technical analysis, understand why markets moves, macroeconomic factors, news events. And we'll also cover trading platforms like the brokerages that I was talking about. What are the different brokers? What do they offer? How to utilize them effectively? How to understand how are they making their money so that we can be smarter and make our money, right? So this is our first course, our foundation in the stock market course. Our second course is the mastery course. In this stock market mastery course, you would have had to finish the first course because you need to know what trading is and what you're going to be trading. And or you can have traded for a few months and you want to better your trading, right? So our mastery course will go into risk management, which is one of the most important components of being a successful trader. We'll cover some very specific trading strategies and in-depth examples of strategies that I've done and traded for the last few years, right? We'll focus on how to construct a watch list, how to go through scanners, how to go through many different names and how to filter them, deciding what to trade for the day based on news events. We'll then focus on trade management. Remember, I said that trading is not just enter and exit, it's everything in between. So we'll talk about everything in between. What do you go through emotionally, psychologically? What happens with price action volume? How do you decide from here to here? What do you need to do? Do you take your profits early? Do you wait? Do you wait? Do you wait? Or do you exit right here because you don't think it's going to go here anymore? What happens in between? That is the trade management. And journaling. I'm sure many of you journal in your daily lives, but this is with regards to noting down your trading stats, understanding what times of the day are you more profitable, what names are you most profitable in, what emotions do you go through when you trade? Do you feel more anger? Do you feel more greed? Do you feel more fear? Are you scared to take a position because you think you'll lose? Why do you think you'll lose? Trading psychology, all these things, and mastering the mindset is what we're going to go through in this mastery course. And lastly, we have the options trading course. I told you that I trade stock options in the US markets, and this course is going to cover basically what is options. It's I think it's one of the top leveraged products to trade because it's so beautifully designed and you can use it in such a complex yet simple way to leverage all your existing positions and make more money going forward with very little capital investment. So we'll talk about what is buying and selling options, what are calls and puts, the characteristics of options, what are options Greeks, what defines an option, how does the price of an option move based on how the stock price moves. We'll cover risk management, especially with regards to options, because options prices move very differently to normal stock prices. So how do they move and how do you manage risks appropriately with options? We will go over that. And lastly, we'll talk about option strategies that big funds, hedge funds use on a daily basis to manage their positions, hedge positions, and all of that. So with this options course, you would basically have to have traded for at least 1 year, which is what I would suggest because you need to know how the markets move. You need to know how stocks move. Or you can have completed the course 1 and course 2. By the time you've covered those 2 courses, you will have traded for yourself a little bit. I would have shared my personal anecdotes. I would have shared my personal examples. And you could be on your way for the 3rd course, which is options trading, options trading is very popular because of how it requires very little capital to start up and the potential of like 100%, 200% returns within the span of like 15, 20 minutes is very common, right? So I hope that I've been able to shed some light on some, why trading and investing is important, financial freedom, time freedom, some concepts on what exactly can you trade in the markets, the misconceptions that most people have about trading, and as most importantly, why most traders fail because of a lack of education.